and we are concerned about SAP only, right? So I will take only SAP. Just a request, if you are not able to hear my voice, just let me know so that I can stop and I can go ahead. Okay. Otherwise, I assume that you are all able to hear me. Fine?
Mm-hmm.
Yeah. Now, coming to SAP, SAP stands for Systems, Applications, Products in Data Processing. This is what SAP stands for. And SAP has, this software has been developed by former IBM employees, and they released the software in the year of 1972. Headquarters of SAP company is located in Germany. This is very brief explanation about the SAP history. Okay, I'm not going in detail about the SAP history and all. Okay, as a consultant, if you this information, it will be sufficient. Now, just a second. Brief introduction, right? SAP stands for Systems, Applications, Products and Data Processing, and the software has been developed by IBM former employees. They released the software in the year of 1972. Headquarters of SAP company located in the Germany. Now, other than this, I will directly go to the SAP FICO. Okay, I am not giving any introduction other than this one because it's not required. You are already into. You have some experience, right? So you will be able to cope up. Now, let's talk about FICO. Now, what is FI and what is CO generally? Rakshanana?
Yeah, it's financial and cost controlling.
So it means that there will be certain departments in the organization. One of the department is finance department, isn't
That's
it?
right. Yeah.
Same way, another department is called as costing department. In other words, in SAP it is a controlling module, right?
Yes.
So that part we are clear now. Now we'll take FI first and then we'll move on to the CO. Let's talk about the FI. FI stands for financials, as you said. Now, when the company is going for FI implementation, FI model implementation, the basic objective behind this is they would expect financial statements from the SAP FI system. I mean SAP system from FI model. It means that the basic objective of FI is to generate financial statements. Other words, to meet the legal requirements.
Yeah.
Basic objective of
Your voice is breaking.
so that this is nothing but that is balance sheet and profit and loss account.
Yes.
P&L account. Okay, this is the main purpose for FI implementation in any organization. In order to get balance sheet and profit and loss account of that organization, they have to follow some of these sub-module implementation as well. When I say SAP FI, it includes these sub-modules. We have general ledger accounting, we have accounts payable, we have accounts receivables, we have asset accounting. These four are called as SAP FI sub-modules. We call it as a sub-modules. Okay?
Yeah.
Now, we'll take one by one. First, we'll take general ledger accounting. what we are going to get out of this general ledger accounting. If I am configuring my system for general ledger accounting, what would I get? Now, general ledger is a place, I am just giving the definition of general ledger. General ledger is a place where you can create multiple GL accounts. With that GL accounts, you are going to update the books of accounts with the help of GL accounts. If you don't create GL accounts, you cannot bring or you cannot update any value in the report. So, general ledger accounts are mandatory in order to take the financial information into books of accounts. Am I clear on this?
Yes.
So, GL accounts are mandatory one. GL accounts are mandatory one. In general ledger accounting, we are going to see how the GL accounts will be used for the financial information, and how we are going to take them as a accounting entries in the books of accounts. That is what general ledger talks about. And you will also get the balance sheet and profit and loss account, right? Those two statements is poorly dependent on the general ledger accounting, because with the general ledger accounts only you will be able to prepare the balance sheet and profit and loss account. Does it clear?
Yeah.
Now, whenever you get any doubt, you can stop me and you can ask me during the session. No problem. Okay?
Thanks.
Now, we'll talk about accounts payable. Now, if you see this word term itself, accounts payable, it means that it's a payable. We have to pay something to someone, or you have to pay some amount to some organization. That is what the payable means, right?
Yeah.
So what it means, what we are going to cover here is that we are going to cover, first of all, we'll understand when this is going to be coming into picture. Then we'll talk about what are the things to be covered in this one. Accounts payable comes into picture when you purchase something on credit basis. When you purchase something, in the sense material or service, on credit basis. If it is with cash, you won't consider that financial transactions in accounts payable. If it is a cash, that is different aspect. We will be covering it in another separate one. It won't cover in accounts payable. Accounts payable talks about purchases that are being made on the credit basis. Clear?
Yes.
It covers vendor, supplier, creditor. Isn't it? Vendor is nothing but the person who is supplying material or service. Supplier is also similar term for the vendor. Creditor is also synonym for that one, right? These three terminologies are one and the same. So, in accounts payable, you are going to cover all credit transactions. Obviously, the credit transactions would cover the vendor, would cover the terminology called vendor or supplier or creditor. Now, what we are going to cover in accounts payable, we are going to see P2P cycle, P2P called as procure to payment cycle.
We said purchase to purchase, right?
Yeah, it depends actually. Maybe there are what is it, purchase to purchase, or you can also call it as a P2P, procure to pay also. Okay, depends upon the organization or area or location. Okay, in India, most of the times we call it as a procure to pay. Yes, I understand that purchase to purchase also fine. Okay, you will go ahead with that. I'll just mention procure to pay here.
No, that's fine. Procurement to pay, yeah.
What I will do, I will mention the points that are going to come under this procure to pay cycle, and you can see, you can correlate with your purchase to purchase cycle, and let me know if it is getting deviated to that. Okay.
Okay, no problem. Yeah.
Now, procure to pay cycle in SAP from FICO perspective, you will be having the first purchase order. People will be materials management people will be created purchase order and the transaction called MV21M. Once we release the purchase order to the vendor, obviously he has to send the material to the company, right? So we are going to get the goods called as goods. We have this is also done by people and the transaction code is MIGO. Now, once the goods receipt is done, then we'll be going with the invoice receipt or invoice verification. Will be done in it is FI both. Invoice verification will also done by the FI people. And then finally, we have to pay the amount to the vendor, right? Because he supplied material or service. So for that you have to pay, right? So outgoing payment we call it as outgoing payment. Will be done in F-53. Okay. These are 4 activities involved in the procure pay cycle. Is that clear?
Yes.
Now, shall I go ahead with accounts receivable? Do you have any doubts up to this?
No. That's fine. You can just go ahead with accounts receivable.
Yeah, right. Now, we'll talk about accounts receivable. Accounts receivable will arise when you sell something on credit basis. Okay? When we sell goods or services on credit basis, then that would be covered under accounts receivable, isn't it? Now,
Yes.
it covers customer. We also sometimes call it as a party debtor. Right? These are the synonyms for the customer or party. Okay. Now in accounts receivable, it is poorly meant for customer and receivables happens or arises at the time of you sell something on the credit basis. Here we are going to see O2C, order to cash cycle. Order to cash cycle. Okay. This cycle consists of sale order VA01 VA01 I guess VA01. I will confirm the transaction code. And then once you get the sale order from the customer, what you will do? You will deliver the goods, right? You will deliver the product. So delivery takes place, and then you will be billing the customer. Finally, you are going to receive the payment from the customer. That is called as incoming payment. It is VA01 VL01N billing BF01 incoming payment F-28. Okay.
Just one question.
And then correct me if any transaction codes are wrong. Okay.
Sorry, connect you. Here you said order to cash cycle, sale order. I understand. Okay, you got the sale order, you receive the delivery, you get the billing. Then what do you mean by incoming payment? You just need to pay the vendor, isn't it?
No, not vendor, right? See, this is accounts receivable is purely meant for customer related, right? So you are selling something to the customer.
Oh,
From your company, you are selling something to the customer. So you have to receive the payment for what you sell, right?
Okay. I got it
So the
now.
payment is coming inside the organization. The term what I am using, that it is coming inside the organization. You are receiving the money. So that is what the incoming. It is coming inside the organization. Somebody
It's
is paying.
inside, so your customer is inside the organization.
No. It's not that meaning actually. You can say other words. You can say that if I remove the incoming payment, what you can tell? I am removing the incoming payment. So just it is a simple payment. So how you are going to understand this one?
I just got a little bit problem here. Okay, if you have a customer, so let's think about in the customer perspective. Customer give you an order for a car. Okay, that's a sale order. So they're going to give you one order for Range Rover. You didn't provide the delivery because this is not on the credit basis. You will ask them, okay, this is a billing, and then they're going to pay it. So in that case, I got confused in the delivery. But if
Yes.
you said that, okay, yeah, you continue.
Yeah, Rakshan, go on complete your.
So I'm just a bit confused about this cycle, order to cash cycle. Why we receive a delivery? Because we are not working on the credit basis with the customer.
Yeah, I understood your point. Okay, now all the cash related purchases are sales. All the cash related purchases are sales. We have different options in SAP. If you take SAP ERP FICO model, standard model, we have cash journal concept. Cash journal concept. Okay, we have cash journal concept. What we are going to do in that cash journal? We are going to treat all, we are going to consider all the cash related activities in the cash journal. It means that if I purchase some material on cash, I will be taking that information in the cash journal. If I am selling something on cash basis, then I am taking that in cash journal. It won't come under accounts receivable
Your voice is breaking.
because
Sorry,
yes, hold
your
on.
voice was breaking, Ganesh. Can you please repeat it?
Yes. See, for cash related activities, we have cash journal concept in SAP. Whether it is a sale or purchase, we are going to bring the values into cash journal. When we say credit items, then we have order to cash cycle, or we have accounts receivable and accounts payable for credit related activities. If it is cash, it won't fall under either accounts receivable or accounts payable. It will directly go to the cash journal. Whatever it is, whether it is a sale or purchase, it will directly go to the cash journal. If you purchase something on credit or if you sell something on credit, then only account receivables or accounts payables comes into picture. Otherwise, these will not come. Okay. Now, what I understand is that if you take some retail business, if you take some departmental stores and all, no, as a customer, I will directly go there and I will buy the material and I will pay it. It's a cash transaction.
Okay, yeah, I got it.
So you have to segregate or you have to see the industry wise actually. The application also will be more specific based on the industry. SAP
Okay.
has developed their software by taking consideration into, by taking industries into consideration. Okay, they segregated industries into manufacturing, retail, banking, IS, media, manufacturing, automobiles, like that they have divided it. Okay.
Oh,
Now, I understand your question. Okay. Most of the times,
thank you.
not most of the times, 100% we are going to cover all the cash related transactions into cash journal. Not in accounts payable or not in accounts receivable. Am I clear
Okay,
on this?
sorry, I just got mixed both terminologies. Thanks for clarifying me.
Yeah, Raksha, no issue. Okay. Now, we'll go ahead with the asset accounting.
Yeah.
Asset accounting. Generally, in any organization, if you go and see asset department, they can segregate n number of types. I can segregate my assets based on my requirement. But in general, if you say assets would be of two types. One is current and fixed. Current assets another one is fixed assets. Okay. Now, in SAP, in FI, asset accounting deals with only fixed assets. Asset accounting deals with only fixed assets. It does not deal current assets because current assets will be part of these models: general ledger or accounts receivable, general ledger or accounts receivable, and it does not come under asset accounting. So asset accounting in FI it covers only fixed assets. This point is clear. Only fixed assets. Covers only fixed assets. What we are going to see in asset accounting? We are going to see how to procure an asset, procurement, transfers, retirement, how you are going to sell your asset, and depreciation. These are the specific things that we are going to look at in asset accounting. Okay? I repeat, asset accounting covers only fixed assets in SAP. It does not cover current assets. In asset accounting, we are going to see how we can procure fixed assets, how we can transfer the fixed assets, and how to sell that fixed assets if required, and how we are going to depreciate that asset. For using that asset, we have to depreciate it, right? Because the value of that asset will go down by year to year, right? It go down.
Yep.
So that is called as depreciation. How we are going to do that one? These are the things that we are going to cover under asset accounting.
Hello? Yeah, now I can hear you. Yeah.
Okay, fine. I was on mute for some time, okay? Now, we'll talk about controlling. Any questions so far?
Not yet.
Okay, fine. We'll talk about controlling model, okay? CO stands for controlling. CO stands for controlling. The basic objective for doing implementation of CO is to meet internal management reporting requirements. Okay. I repeat. Rakshananda, are you able to hear me?
Yes, I can hear you, Ganesh.
Yeah. Now, CO stands for controlling or costing. In other words, you can say costing. Why we need to go for CO implementation? What I am going to get if I go for CO implementation? I will be able to generate n number of reports from controlling model. That is what the purpose of going for CO implementation. Now, the reports that I am going to generate in CO model would be more useful for the management people. Now, simple example I will give you. Simple example for the management report. Assume that I am a manager of finance department. I wanted to know what is the cost incurring for my department on a monthly basis. I would be giving my budget. It's not a budget. I would be giving my actual value, plan values. Let us say my department cost should not go beyond 10 lakhs rupee for the month. Every month I have budget or I have plan for 10 lakhs. My plan should not go beyond 10 lakhs. My actual should not go beyond 10 lakhs. Isn't it? That is what my plan. As a manager, I wanted to control my cost. It should not go beyond 10 lakhs. That is what my limit. Okay. Now, on day-to-day basis, users will be posting the entries, right? Users will be posting the entries. They will capture all the expenses, they will capture all the revenues, right? So, I will be taking the report. Maybe on daily basis I can take, system will be able to give that. I can run weekly report, I can run monthly report. So what I will do, I will see what is my weekly plan, whether my actual expenditure or actual cost going beyond my plan for a week or it is under control. So I am going to observe, I am going to keep an eye on the actuals that is being flowing in the system, which is actual values inputted by the users. Okay. So at the end of the month, what I am going to see, I am going to take the report for my department. This is what 10 lakhs I plan, and I can see what is the actual values that has been updated in the system. Let us assume that it came around 12 lakhs. So what I need to do as a manager, I have to understand where the mistake or why this 12 lakhs has come. I planned only 10 lakhs based on so many reasons. I kept 10 lakhs my plan value, but I can see my actual value is 12 lakhs. So as a manager, what I am going to do, I am going to ask the concerned people to provide the various reasons why this has been gone up by 2 lakhs. I have to justify with reasons, isn't it?
Yes.
So you are going to get the reports like this. You will be having actual values, you will be having the plan values, so that you can compare. You can see the variance. You can see the variance. You can see the variance. If you see variance, any abnormal figure, then you are going to find out the reasons for that. Next month you are going to arrest them. It should not repeat it, right? See, maybe it is for first time somewhere something went wrong and you did not plan properly. You will take necessary steps and you will correct it in the next month, right?
Correct.
So in controlling side,
Ganesh, your voice is breaking.
Yeah, hold on. Yeah, how is that now? Is it fine now?
Yeah, I can hear you now.
Yeah. A different level of management will be generating different levels of reports, and they are going to see how the revenues or how the cost is going to hit the system, and they will take the necessary steps in order to get the more profits for the organization. That is what the objective of controlling, or that is what the reports that we are going to use in the controlling model. Okay. Now I summarize what I did, what I spoke so far. CO stands for controlling or costing. As a manager, you have to control the cost in order to get the profit. For that reason, you have to monitor the reports, or you have to run the reports, and you have to analyze the data where and all going mistakes, or where and all planning is not adequate. So you are going to make it correct, and you are going to achieve the targeted results. That is what the objective. Clear?
Yes.
We have submodels in CO as well. We have submodels in CO as well. Okay. We have
Ganesh, I can see your notepad.
yes. I stopped sharing. Okay, now I share it. Okay. Now we have cost element accounting. We have cost center accounting. We have internal orders. We have profit center accounting. We have profitability analysis, and we have product costing. Okay, these are the submodels available in controller. Now I'll go one by one. We'll take cost element accounting. Okay. Action, is that clear? Shall I go ahead?
Yes, please.
Yes. Cost element accounting. Cost element accounting is, or it covers cost elements. It covers cost elements. Now, what it means is that you have general ledger accounts in FI side, right? You are going to create different general ledger accounts in FI model. Because without GL accounts, you cannot capture any financial information in SAP system. For that reason, you have to create the GL account. Same way, whatever transactions you capture in FI model, the transactions should get updated in the controlling module also. Otherwise, you don't get the report. For that reason, whatever GL account you create in FI side, the same GL accounts would be created in the CO as well. I repeat, assume that I created a raw material GL account in FI side, a raw material GL general ledger account in FI side. So I am going to create same raw material GL account as a cost element in controlling model. As a cost element in controlling model. Otherwise, I cannot.
Sorry to interrupt you. Who is going to do that? Because the GL account is a finance person, finance analyst is going to do that. So he's going to provide the same information to cost element accounting, or he's going to do the same because he's the person who knows what he has created in GL account.
Yes, you are right. Now, how the setup would be, in some organization they will be having FI as well as CO consultant separately. In some organization, only one guy will act as a FI CO consultant. Okay. Now, if you see in real time, from the individual perspective, if the organization is not that very much big, then these two will be clubbed under one department called as finance department. If the organization is in large, if the organization is very big, then you can expect there will be a costing department separately and there will be a finance department separately. Now, whenever they wanted to create any cost element, they have to get in touch with the FI department and they have to, in coordination, they have